it's now time to check out what are the items in the negative list. The Act prescribes 8 broad categories that fall into the negative list, and within these 8 categories, there are exceptions. Specific exceptions, we'll identify those. We'll discuss further on the provisions related to motor vehicles and works contract, and also dive into the proportionate credit mechanism. Let's start off with the negative list. A quick refresher, we've already discussed the 2 types of supplies that are there, value addition and overhead. This is the concept that we've been following to understand negative list. Overheads are disincentivized, and that's why they fall into the negative list. So the government has listed out supplies in the negative list for which input tax credit is not available. Now remember, the Act does not call it the negative list. It only lays down that for such and such items, input tax credit is not available. But it is definitely in the form of a negative list. Except these, for everything else, input tax credit is available. And that's why we are using the word negative list. What are the items which come into this list? 1. Supplies which go into personal consumption. Supplies which are no longer in existence. A specific list. This is a list within the negative list which points out to very specific types of supply. Input tax credit is not available on taxes paid due to fraud or error. Supplies relating to motor vehicles, works contract, immovable property, and composition scheme. It could become unnecessarily complicated and difficult to remember all the items that fall into the negative list if we don't understand the logic behind why each of these occurs in the negative list, why there is no input tax credit for each of these. Well, we've taken a stab at identifying a logical sequence why these are in the negative list. We have identified 3 broad reasons. 1. That these items do not add any value. This goes with our basic principle: value addition is incentivized and overheads is disincentivized. So no value addition, no input tax credit. Second reason, no double tax benefits. On supplies where there's already depreciation benefits, even though it's in the direct tax, there's already a tax benefit, they should not get double tax benefit through input tax credit as well. And so, where items have already claimed depreciation, no input tax credit. Third, very obvious reason, penalty. You cannot get input tax credit for wrong or fraudulent acts. So these are the broad 3 categories that we've identified as reasons for items being in the negative list. Let's categorize our 8 main things under these 3 reasons. For no value addition, personal consumption, a specific list of items, we'll get to this list later, and non-existent goods. Under the second reason, no double tax benefit, we have items related to motor vehicles, works contract, immovable property, and composition scheme. The third category, penalty, very obviously there's just one more negative list remaining, fraud and error. Let's look at each of these individually. The first category, no value addition. Personal consumption, specific list, and non-existent goods. Well, supplies related to personal consumption simply means that supplies used by the businessman for his own consumption and not for furtherance of business. Say George, who runs a garment store, bought the garment for his children and not to be sold further in his business. That is personal consumption. The garments that he bought for his children, he cannot claim input tax credit on those. The second item in the list, RIP. Well, these are nothing but non-existent goods. Goods that are lost, stolen, destroyed, written off, or even disposed of as free samples. These cannot obviously be used to further business in any way. When the goods don't exist, how are they supposed to further your business? Simple logic, they do not add any value, and that's why no input tax credit can be claimed on such goods. The third category is the specific list. It's a list of very specific goods and services. We'll get to that in a short while because it's again a list of lot of items. Let's quickly first focus on our 8 broad categories before we move into this specific list. The second reason, no double tax benefit. We have 4 items on it. The first one, motor vehicles. It's a general negative list. On supplies of motor vehicles and any other conveyances, no input tax credit is allowed except for 4 specific cases. We'll get to these cases later when we talk about exceptions to the negative list. Well, a reason why motor vehicles is not included in input tax credit is because it does not really directly contribute to furtherance of business. It's not directly going into output creation, but it's an indirect tool, and there's already depreciation benefit claimed on it. Well, there are a lot of arguments against this specific item appearing in the negative list, because for supplies to move channels to move from wholesaler to retailer to customer, vehicles are definitely required, and so there's a lot of argument, but this could be a reason behind motor vehicles appearing in the negative list. Any works contract supplies, any works contract services obtained for immovable property other than plant and machinery, and if there's tax paid on such works contract, then input tax credit cannot be claimed on this. The third item on the list is immovable property itself. Now remember, this is immovable property on own account for your own use, not for further sale. If any supplies, whether it's goods or services received for construction of immovable property on own account, then input tax credit is not available. You could say that none of the immovable properties are directly used in producing output. There's specific exemption for plant and machinery, works contract and immovable property, except for plant and machinery. And so, plant and machinery obviously is directly involved in producing output, and that's not the purpose of the negative list, and that's why input tax credit on plant and machinery is allowed, but not on any other immovable property. Again, as in the case of motor vehicles, there are a lot of arguments against this provision. But for now, it is still there in the model draft law. The fourth item in this category of no double tax benefit is definitely the composition scheme. We've discussed in detail what the composition scheme is all about in the previous module, and you know there's a specific clause in the composition scheme that no input tax credit can be claimed. Under the composition scheme, tax is already at a discounted rate and the government does not want to give them double tax benefit, and that's why no input tax credit. The last reason that we had was penalty, and there's only one item in that list, fraud and error. Basically, what this item broadly says is that if you have to pay any additional taxes on account of either fraud or error, then you cannot really claim input tax credit on that component of tax that you have paid additionally. There are 3 instances under which you'll have to pay additional tax on account of fraud or error. The first of these instances is all about tax not paid, short paid, or erroneously refunded by the government, or if you've claimed input tax credit wrongly or utilized it by reasons of fraud or any willful misstatement or suppression of fact. So basically, it's all related to fraud. Willful misstatement is again fraud. Suppression of fact is also fraud. So you have paid short tax or not paid tax at all, or the government has refunded money to you by error, then this tax component that you'll have to pay additionally, you cannot claim input tax credit on that. The next 2 instances are related to goods and services. The first of these talks about transportation and storage. If you have transported or stored goods in manners which are contradictory to the provisions of the Act, and the government finds out and you have to pay a tax or penalty on that amount, input tax credit cannot be claimed on this tax component. The last instance is about supplying and receiving goods. If you have done this, supplied or received goods in manners contradictory to the Act, then you cannot claim input tax credit on the additional tax that you'll have to pay for such act. So these are the 8 broad categories under the negative list. personal consumption, non-existent goods, composition scheme, and fraud and error are pretty much self-explanatory. The remaining 4 items of specific list, motor vehicles, works contract, and immovable property, need a little more of explanation to do. You notice that in specific list, motor vehicle, and works contract, there's something called exceptions apply. Negative list is basically a list where no input tax credit is allowed. So exceptions to negative list would be nothing but a positive list on which input tax credit would be allowed. We'll check these exceptions out in the next lecture.